Okay, chapter 8, managerial cost concept and cost behavior. That's what we focus today. And that will be the main focus here. There will be questions that's going to come from this chapter, so pay attention, please. Obviously, again, to be effective managers, I want you to be proactive in area of setting the goals, effectively plan, directly control the operation, which gonna lead you to your goal. So in the companies, when you're working as a manager in the company, there's a questions that you have to ask. And the question that you have to find the answers. What's the cost involved of making this product? What's the volume? That's gonna change the cost. And how the cost change with the volume. What's gonna happen if we automate our business? How best we can control the cost without sacrificing the quality? And which product we should keep producing or which product we should stop producing. If we want to add a new product, which one will be the right one? All those questions are part of managerial accounting, and they involving understanding the costs and how the cost, which are the costs in the company and how those costs behave. So let's start first. First classification will be between the product cost and period cost. In order to understand the product cost, we have to understand that there's always a cost object, which is cost object is anything that we want to accumulate the cost and find out what is that, how much this thing cost. For example, there will be different things. Usually the final product is the one that we want to find the cost, the product that we're selling to the customer, for the product that we're charging the customers for. In different business, example will be different hamburger for the restaurant, haircut for the service company, tax return for the if you tax prepare, the price of the house if you're building the houses. So what you have to do, you have to accumulate the cost to find out what's the cost of that particular item or that particular product that I'm selling, that particular service that I'm selling to my customers. That will be a cost object. Based on the cost object, we're going to have a product cost and period cost. Product cost will be the only cost because the company manufactured that particular product. So because McDonald's producing hamburgers, product cost will be the hamburgers. Is there going to be other costs? Yes, there will be other costs. But those costs will be period costs. Which will be the period costs? The accountant that's doing the accounting for McDonald's, that will be period cost. Because helps the business. It doesn't help selling more products. That cost is not related to the product. It's related to the business. Selling the product, sending the advertisements, doing commercial. That helps you to sell the product, but it's not part of the cost of the product. Marketing, another thing. So that's why, for that reason, we're going to have those two: product cost and period cost. Which are the product costs? There are three product costs, which are also cost manufacturing cost if we are a manufacturing company. Once we're producing the products, we're always going to have the following three costs: direct material, direct labor, manufacturing overhead. If we're a merchandising company, we won't have those costs. Why? Because we're just going to buy something and we're going to sell it. We're not producing anything. We are buying, selling goods, which are already been manufactured. But in the manufacturing company, for the calculating the product cost of the product, we always gonna need direct material, direct labor, manufacturing overhead. Now, what's the direct material? Direct material is only and only the material that we can directly and easily trace and calculate which is related to our finished product or our cost object. For the baking, that will be flour. For the bottles, soft drink, that will be the syrup. For the cars, that will be steel. Then we're going to direct labor. What's the direct labor? Direct labor, again, is the labor that we can easily and directly trace to the cost object or our product. For the different purposes, that's different labor. For the hairdresser, that will be the person who doing the haircut. For the mechanical shop, that will be the cost of the mechanic. And then we're going to the last cost, which is manufacturing overhead. Manufacturing overhead is going to have part of the material, part of the labor. But which will be those? Those will be only the indirect material and indirect labor. So manufacturing overhead is going to include the cost, which is still related to our cost object or our product, but we cannot easily trace. They're still part of the cost of the product, but they cannot be easily traced and also cannot be easily classified as a direct material and direct labor. So for that reason, we're going to have that indirect material, indirect labor, depreciation, taxes, maintenance, and anything else. Let's see which one is what. Indirect material, it will be still raw material, but that raw material compared to direct material cannot be easily traced to the product. That will be considered part of the manufacturing overhead. For example, in the baking industry, as you know, yes, you need the flour to produce the bread, but you need a pinch of salt as well, or 2 pinches of salt. If you don't have the salt, the dough is not going to be elastic enough. So you need that salt. So for that reason, can we easily trace the cost of the salt to the bread? That will be difficult. For that reason, we're going to treat the salt as an indirect material. Still going to apply to the cost of the product, bread, but as an indirect material. Then we're going to have the indirect labor. What will be the indirect labor in our bakery store, for example? Direct labor, yes, that will be the baker who actually bake the bread. What will be the indirect labor? Indirect labor will be the cleaning person that's come after to clean our baker. And that also will be the security person we have to hire to protect the environment that we have. Also, there will be other manufacturing overhead costs, which will be the electricity for the building, rent for the place that we're having to produce our breads, property taxes if we have to pay, anything like that related to the entire operation. Now, we're going to have some classification between those costs. First classification will be the prime cost. Prime cost will be calculation between direct material and direct labor. It's called prime. Why? Because can be easily traced to the object, also come first. Prime means first. Watch which one comes first, always direct material comes first, second comes direct labor. Next classification will be the conversion cost. The conversion cost is the cost that convert raw material or direct material into the final product. So material itself is not going to magically convert into the final product. So we need somebody, human, to work on it. Plus we need manufacturing overhead. So for that reason, direct labor plus the manufacturing overhead, we're going to call them conversion cost. So the formula will be direct material plus direct labor is going to be prime cost. Direct labor plus manufacturing overhead is going to be conversion cost. Be careful with this. Remember it. Write yourself a note. This is going to come one way or another. Which one is what? Direct material plus direct labor plus manufacturing overhead. So now you have direct material plus direct labor plus manufacturing overhead. That's the product cost. But direct material and direct labor, that's a prime cost. Direct labor plus manufacturing overheads, that's conversion cost. I want you to know those things. So which of the following is not element of the manufacturing overhead? What do you think? By knowing the manufacturing overhead is anything related to our product. The place that we're making the product.
Sales is.
Sales manager, yes, salary is not related to the manufacturing overhead. You're right. Plant manager salary, since he's at the plant and working on the production, definitely overhead. Factory repair wage, yes, definitely overhead. Product inspection related to our product, manufacturing overhead. How about this question? Which of the following will be considered product cost?
We have to add in this.
There are two options here. You can add or you can deduct. Do we have the total cost?
Yes,
Is direct labor part of the product?
yes.
Direct labor plant, is it part of the product?
It's
No.
part of product.
Yes. Indirect labor, is it part of the product?
No,
No.
it's indirect.
Yeah, but is it part of the product?
It's part of the product.
Don't forget, product cost is
Okay,
direct
okay.
material plus
Plus
direct labor
right.
plus manufacturing overhead. Those three. Is direct labor part of the product cost? Is direct labor part? Indirect labor, is it part of the product cost?
Yes.
Yes, it's manufacturing overhead. Is supervisor salary for the plant, is it part of the product cost?
Yes.
Yes,
Yes, it's manufacturing overhead, right? Sales commission, is it part of the
yes,
product cost?
yes,
No,
No.
I guess.
yes,
Yeah.
sorry.
Sales salary, is it part of the cost of the product?
If sales commission is not done, that is also
Right. So sales commission and sales salaries, those are not.
not
Why? Because they're related to sales, not
free
part of the product. So if the total cost is say 20, we have to deduct those two. Once we deduct those two,
80.
for 480.
480. Which is the correct answer then?
C.
Or 80.
C. So you can see this question, you can answer it by adding those three or getting the total minus those two. Either way. All right. So let's go with the product versus period cost. Now, direct material, direct labor, manufacturing overhead, since those are product cost, is gonna stay as a cost in our product. Those are also called inventorable cost. Again, remember it, direct material, direct labor, manufacturing overhead, product cost. Then becomes the question, what's going to happen after that with the product cost? Product cost first is going to go to the inventory, going to stay in the inventory. How long is going to stay in the inventory? Until we sell the inventory. Once we sell it, it's going to be cost of goods sold. Why? Because before that was the cost of the inventory. It's going to be recorded as inventory as inventorable cost. Once we sell it, it's going to be cost of goods sold. And then we're going to reduce the inventory. We're going to reduce the inventory and we're going to increase cost of goods sold. Product cost. That's the product cost. Now the period cost. Period cost is the one that's not related to the product. Those are non-manufacturing costs. Those are related to our operation. For that reason, we're going to directly expense them. And we're going to deduct the revenue with this cost. So which are those costs? That will be the sales and marketing expenses. Sales, salary for the salesperson, salary for the sales commission, everything that's go directly expense. Also accountant, CFO, everybody who is directly involved with the main operation of the business, that's part of that's not manufacturing cost, so that's going to be part of the period cost. Period cost is because goes to the income statement, which is for the period of time. So simply how we can see it is direct material, direct labor, manufacturing overhead, always product cost. Or inventorable cost. Non-manufacturing cost or non-inventorable cost are the one that are not directly involved with the
Professor,
production or indirect.
ask
Yes.
so this other indirect cost, what type of costs are this in other indirect costs?
In other indirect costs, it can be utilities. It
Okay,
can
rent
be
and rent.
utilities. Sorry?
Rent, is it?
Rent, yes, it's gonna be, but depends which rent. If it's rent for the main office of the company, that's gonna be administrative expenses. But if it's the rent for the factory, when we're producing the product, that will be overhead.
Okay, okay.
Make sense?
Mhm.
Always try to link, is this cost somehow related to our product?
Product manufacturing,
Right,
in selling and the.
right.
So if like even if it's fixed cost, like we like this
No, we're gonna
rent.
come to this. Don't
Sorry,
stay
okay,
now.
sorry.
Let's stay now for the product and period cost, nothing else.
Okay, okay, sorry.
Right? How the costs behave at this point we're not talking about. But we're just trying to find, is it the product cost, is it period cost? Right? That's what we're trying to find. So when you cook a dish at home, would you have direct material?
Yes.
Yes. What will be direct material? The groceries that you're using, right?
Uh,
Would you have direct labor?
yes,
Yes.
Yes.
real direct labor.
Would you have indirect material?
No.
Electricity,
Yeah.
Electricity,
No. Indirect material.
material, salt,
Salt,
seasoning.
seasoning, anything like that.
condiments.
Would you have
That
indirect labor?
does
Um,
yourself.
Yeah, but you have to clean after that, right?
yes.
You know, it's not about cooking, but it's cleaning, right? Would you have the indirect cost? Other indirect cost?
Yes.
Yes. What will be that?
Uh, uh, the cost to get the produce or to get the goods from the grocery store.
Okay. What else?
Um,
Electricity, you already said,
Electricity,
electricity.
water,
right? Are you gonna use the oven?
yeah,
Yes.
gas bills,
Yes.
or in,
When you're using the oven, do we have to transfer depreciation of the oven?
yes,
Yes, we do. Make sense?
yeah.
Yes.
Okay. And the period cost will be
Period cost. Mm.
Um,
There will be no period.
there
We'll
will
be
be
eating
not in this case, not at home. The period cost might be the electricity
in
bill
hotel.
to electricity. No, that will be the internet bill. That will be the period cost. Why? Because you're paying for it. It's part of the household, but it's not related to the food that you're cooking at home. Make sense?
yes.
Okay. So let's keep going. Let's do another question here. Tell me what you think here.
I think it is sales commission $4 plus administrative salary 16, which gives me B, which is $20.
How about the other people? What the other people think?
Yeah, that will be the period cost 16 plus 4 because that comes in period cost, sales and administrative. Otherwise, everything is in the product cost.
Okay, excellent. That's the right thing. Okay, 20 is the right one. So now we have this classification on the direct material, direct labor,
Direct
manufacturing
labor,
overhead, which is product cost.
yeah,
This is our product cost, right?
yeah,
And then we have those here, sales
in
commission and administrative salaries, which is our period cost.
period cost.
Make sense? So now what we're gonna do is the total cost is 140, right? That's our total cost, 140. We have those two, which is those are our
Period cost.
period costs, and those are our product costs.
Our product cost.
Make sense?
So 120 will be our product.
Oops, that's you cannot see them now. Let's go choose another one. That's this. No, that's not what I did. Like this. Here we go. You have the product cost, you have the period cost, and you have the total cost. So now what we're gonna do is we're gonna get the total cost, and we're gonna forget about this classification. And we're gonna try to find out how those costs, direct material, direct labor, manufacturing overhead, sales commission, administrative expenses behave. How they behave. Two ways. Either variable, either fixed.
Oh, yeah.
Now the question is, what drives the cost? So what we're going to chase is the cost changes when we change the activity level. If the cost changes, then it will be variable cost. If the cost doesn't change, it will be the fixed cost.
Yeah,
So,
that will be the
right? So the level of activity can change the cost, or the cost can stay the same. That will help us to make better decisions. And that's what will going to help us to understand how the costs behave. So which are the activity that might drive the cost? Well, kilograms that we buy, kilometers that we're driving, people that living, occupying the room in the hotel. So what we're gonna do, we're gonna see, is there's a change in the activity? If there's a change in the activity, how the cost behave? Is it moving up or stays the same? Again, for that reason, we're gonna have two costs. Actually, three: variable, fixed, and mixed. So what we're gonna do, we're gonna identify the activity that's causing the changes, and based on that, we're gonna classify the cost on the variable, fixed, and mixed. Now let's see which one is the variable cost. Variable cost is the cost that directly and proportionally changes with change in the activity level in total. But per unit stays the same. Perfect example will be coffee, McDonald's right now. McDonald's, you can buy a small black coffee for $1. So if I go to McDonald's and decide not to buy a coffee, how much will be my total cost?
I'm going to say $1.
No, sorry, how much?
But
you went there and decided not to buy.
Not to buy
Even
coffee. How much will be the cost of?
or
How much?
not buy, the cost of going over there is the same.
So what's my total cost? If I go there, I see coffee, small coffee sold for $1, and I decide I'm not buying coffee. How much my total cost?
the cost of going there.
Yeah, the cost and the time you went there.
No. Forget about those one. We're talking about the cost of the coffee.
The cost will be the same even though you buy or not.
So how much? So no. Watch this. Listen to me carefully now. I'm going to McDonald's. I'm checking the price of the small coffee. I'm seeing the small coffee is sold for $1. And I turn around and walk away from the McDonald's. how much is the total cost for the coffee for me? Sorry?
$1.
Again, you're not listening to me. So listen to me carefully. I'm going to repeat the question again. I'm going to McDonald's. Do you understand this? Can you guys hear me? There's a lot of noise. Let me cut the noise first. So the question is, I'm walking into McDonald's. I'm seeing the price of the coffee, small coffee, and I see the price of the coffee is $1. And I decide not to buy a coffee and walk away from the store. How much is my total cost for the coffee? How much I paid for the coffee?
If you are
Nothing?
not
Zero?
Zero.
will be
Zero.
there.
Why? Because I decide not to buy. But what's the cost for the coffee?
$1.
$1. Now,
That's
if I decide to so do you understand this? Now the cost per unit is $1. But my total cost is zero. Why? Because I decide not to buy. Make sense?
yeah.
So what's gonna drive my cost? That will be
Intent?
number of the coffee that I'm gonna buy. Correct? If
Yeah.
I buy, let's say I buy now 10 coffees, how much will be my total cost?
$10.
$10.
$10 plus
$10.
tax.
Why? Because make sense? If I decide to buy 2 coffees, how much will be my total cost?
$2.
$2. So what drives the cost for the coffee for me? Is it the cost for the coffee or the number of coffees that I'm buying?
Number
Number of the coffees that I'm buying. Do you understand this? So what's interesting with the variable cost? Variable cost per unit always gonna stay the same. So the cost for the coffee always gonna be $1. But the total cost will directly proportionally will be related to the numbers of the coffees that I'm buying. If I decide to buy 0, I don't have to pay. If I buy 1, I have to pay $1. If I have to buy 10, I have to pay $10. Why $10? Because 10 times $1 is going to give me $10. Make sense?
So it depends upon the how much quantity you are buying.
Exactly. Make sense?
Mm-hmm.
Same thing like you go to buy tomato. You're going to buy tomato and you see the price is $3 and decide not to buy. How much is the total cost for you? 0.
Zero. The same like coffee.
Exactly.
If
But
you
if you buy 5 pounds times $3, you have to pay $15. Make sense? Now let's see in this example here. In this company, they're producing tablets. The camera that they're using for the tablet is that their variable cost. So basically, for every tablet, they have to install 1 camera. So the cost for the camera is $10. So what that means? That means that if they produce 2,000 tablets,
then
the
2000
total cost for the camera will be $20,000. If they produce 10,000 cameras, the cost for the cameras, total cost for the cameras will be $100,000.
so the output is the it depends upon how much output they are producing.
Exactly.
And there will be the fixed cost like 10. It doesn't change. Only your output is changed, then there will be changes.
So let's stay with the variable cost first before we move to anywhere else. So let's see now how the costs behave again. Per unit, variable cost always going to stay the same. You always have to pay $1 for the coffee, $10 for the camera, $3 for the pound tomato. What's going to drive the total cost though? How much you buying? If I produce 10,000 10,000 tablets, I have to pay $100,000. Why? Because camera costs me $10. If I have to produce 6,000, I have to pay $60,000 for the camera. Why? Because the camera cost is $10. Make sense?
Yeah.
Does this make sense?
Yes, it does. Thanks.
Let's
Yes.
go now to the fixed cost. What's interesting with the fixed cost? The fixed cost in total always stays the same, regardless how many times you're using it. For example, let's go for example with examples. How many of you buying compass card, monthly compass card? Is there
I do.
anyone? You
I
do.
do. I do.
How much you paying for the monthly compass card?
For one zone, like 107 something.
For one zone. How much you paying? 107.
7 something, yeah, like around 8.
$108. So now,
Yeah.
imagine you paying $108 on February 1st,
Mm-hmm.
and you riding the SkyTrain only one time in the entire February. How much is the cost for that trip for you?
The same, even though I only travel,
Right?
that will be my fixed, even though
Right.
I will use it or not.
Right. So if you travel 2 times per month, how much will be the cost now?
So divided by 2,
Divided by 2.
108 by 2, divided by 2, yeah.
So
So it
if
will
you
decrease,
right, if you riding the SkyTrain 10 times,
divided by 10,
divided by 10. If you're riding the SkyTrain 100 times,
then total divided by 100.
by 100. So do you see the difference between the variable and fixed cost now?
Yeah,
Total cost always gonna stay the same, $108.
yeah,
But the cost per unit is gonna start decreasing.
decreasing, yeah.
Why? Because you're using it more.
Mm,
Make sense?
yeah,
So let's say for example, you pay $3,000 for this course, and you pay attention in the course only 1 minute. How much that minute's gonna cost you?
total minute, like our credit score.
$3,000
$3,000. So what's your objective here?
to listen to the course every
Every
minute
minute.
of the course.
Every
We
minute of
have
the
to
course,
check advantage for every
right?
second and minute.
Every second, right? That's how you're gonna decrease the cost per minute. Make sense?
Mm.
Do you understand this?
Yes, I do.
Right? So, but now we have a problem, right? Because usually we have a problem. What's the problem? The cost of your cell phone. Imagine on your cell phone you have unlimited text messages. How much you paying for your cell phone? $50? Let's say you're paying for your cell phone to have unlimited text messages, $50 per month. What kind of cost is this? Variable or fixed cost?
Fixed.
Fixed cost. So if you send one text message, how much will be the cost for that text message?
50.
$50. If you're sending text messages, 10 text messages, how much will be
Divided
the
by 10.
50.
5.
$5 per text message? Total cost still gonna be the 50, but the cost
Yeah.
per message will be go down, right?
Yeah.
So what's your objective here?
Maximize the usage.
Maximize the usage.
usage.
Send text messages every single second. And that's how you're gonna utilize the cost, right?
Yeah.
But now we have a problem. What should I do first? Should I pay attention in the class or should I send text message? And you as a manager, you have to decide which one is more expensive for you.
So it's to pay attention in class because that's more expensive.
If that's the one, then please don't waste your money. Make sense?
Yes, Professor.
Okay. So now let's see with this company. What they're doing is they're paying rent $10,000 per month. If they produce 2,000 tablets, how much is the cost for the rent that they have to allocate to the tablets?
The same cost, even though,
No, it's the same. In total will be 10,000, right? But
oh, sorry, divided.
per tablet,
So tablet cost is total fix.
$2, right? Oh no, $5 per tablet. If they produce 10,000 tablets, how much cost from the rent they have to allocate to the tablet? Only $1. Make sense?
Yeah,
So what's the objective?
to produce more.
To produce more within the month. Make sense?
Yeah,
Okay, so what's going to happen now? The total cost stays the same, but the cost per unit goes down, goes down, goes down, but never going to reach zero. That's the tricky part here. It's never going to reach zero. So what we can say is, again, let's repeat this. Variable cost per unit always going to stay the same. But in total, it's going to climb and it's going to increase proportional to the level of usage. Means that if you don't use it, you don't have to pay. More you use it, more you have to pay. Fixed costs, on the other hand, in total, always going to stay the same. Once you pay it, you don't have to pay it anymore. But it's going to come to the point how much you're using it. If you want to decrease the fixed cost per unit, you have to use it as much as you can. More volume you're producing, less the cost per unit is going to go. Now, how the costs behave? They behave in the relevant range. What's the relevant range? Relevant range is the point of the diagram when we can predict the cost with the simple formula. So the actual cost always going to behave in some, either variable cost always going to behave in this kind of curve. Fixed cost always going to be like this. For example, if you rent one bedroom apartment, that will be the total fixed cost on that range. If you go with a 2-bedroom apartment, the range gonna go up. If you go to the 3-bedroom apartment, the range gonna go up. If you buy one zone pass, monthly pass, that's gonna be a range. 2 zones pass, next range. 3 zones pass, higher range. Make sense? So now the question is, we have to find part of the curve where the costs, variable costs behave as a variable cost in terms of cost per unit stays the same. Total cost only changes because of level of activity. And we've tried to find the curve on the fixed cost where the fixed cost in total stays the same and per unit always goes down. That's our objective here. That's why we try to create the formulas. Next cost that we're going to have will be mixed between those two. So we're going to, once we combine the fixed cost with the variable cost, we're going to get the total cost. Now, how can we interpret this graph? Let's say we have a cell phone plan with unlimited text messages, but only with 1 gigabyte data. After you reach 1 gigabyte data, you have to pay $5 additional for every 500 megabytes. So what kind of cost will be that? That will be mixed cost. Why? Because it has a portion of the fixed cost, which is $50. And after 1 gigabyte, start variable cost. More you're using it, more you have to pay variable cost. So that's what's going to drive the total cost. The other way how to interpret this graph is your monthly expenses. Your rent always going to be the fixed cost that you have to pay. but the grocery is gonna be the variable cost. Once you pay the rent, you don't have to pay for the rest of the month. But once you start buying the groceries, you have to buy today, you have to buy tomorrow, you have to buy next day, and that cost gonna slowly start increasing. So the total cost will be groceries plus the rent. So, which cost is what? On the product cost, which is direct material, direct labor, and manufacturing overhead, usually fixed product cost is the factory rent, equipment, depreciation, supervisor salary. Variable cost will be direct material and direct labor. Why? Because more items we're producing to sell, more material we have to use, more labor we have to use. Mixed cost will be factory utility cost. How about the period cost? In the period cost, we're also going to see both. We're going to see fixed cost and we're going to see variable cost, or we can see mixed cost. Fixed cost will be the president's salary, head office equipment depreciation. Variable cost will be the sales commission. More the selling person selling, more we have to pay them. Mixed period cost will be the head office utility cost. Now, the question is, can we predict those costs? Yes, we can. We can use this method, high and low method, to predict the cost. So now I posted you a separate video for the high and low method. I'm telling you right now, please pay attention to the high and low method because I'm gonna test you on the high and low method. So I want you to understand it. So the high and low method, we're gonna have mix between the fixed and variable cost. So approach is to separate the cost on the high and low. So we're gonna use the total cost at high point and low point, and then we're gonna extract the variable cost, knowing that between the high point and low point, only the variable cost is the one that drives the cost. Fixed cost stays the same. How are we going to do that? First, again, we're going to determine the high point and the low point. Then we're going to see the difference between high point and low point. We're going to use the cost as a nominator, activity level as a denominator, and we're going to come up with the variable cost per unit. Once we do that, we're going to find how much is the fixed cost. So let's start with this example. I'm going to copy it. I'm going to move to Excel spreadsheet, and we can move to Excel spreadsheet so I can explain this so you can understand it. And after that, you can use it for your examination purposes on the next opportunity. Then once you see the question. Again, pay attention, please. This is important. It's going to be tested. So, high and low method. As you can see on my screen, this is the information that we have for this. What we have a level of activity, which is kilometer driven. We have the total cost. What we have to identify, we have 4 months, January, February, March, April. What we have to identify, we have to identify the high point of usage. High point of usage.
Yeah.
And low point of usage. Once we get those 2 points, then we're going to see the difference in usage. Once we get the difference in usage, we're going to try to calculate the variable cost. So let's start with first. Usage. What's my usage? Kilometer, right?
1 lakh, yeah, kilometers.
Kilometer. And that
And
kilometer comes with the cost. So I'm going to have kilometers and I'm going to have total cost. Now the question is, Let's go with first with the months or period. Which month is my highest usage?
April.
April. How much is my usage?
The usage is 100,000.
100,000 kilometers. Make sense?
And
How
the
much is
cost
the
is
total
63.
cost? 63,000, right? Which month I have the lowest?
January.
January. How much is the usage?
Sorry, the usage is 40,000.
40,000. And how
And the
much is my
cost
cost?
30,000.
30,000.
So the difference is
So now we have to calculate the differences. So let's highlight this high usage with blue and the low usage with green. So how much is the difference?
60,000 kilometer.
100 minus 40, 60,000 kilometers. And in
There is
cost
33,000.
minus this one, we're getting the 33,000. From here, once I have those numbers, I'm trying to find what's my variable cost. Which is the cost? What's the activity that drives the cost?
The
That
usage of the
Number
vehicle.
of kilometers.
Number of the
Kilometers.
kilometers. So my variable cost will be the cost per kilometer, correct?
Yeah.
So that's what I'm trying to find out. How much is my cost per kilometer? Make sense?
Yeah.
So if cost is measured by cost per kilometer, what will be the formula here?
Variable cost divided by kilometers.
Variable cost divided by kilometers. That's correct. So I'm going to have here, that will be actually in this case, I'm going to have the difference in cost. That will be dollar difference in total cost. And that will be my difference in kilometer,
Difference in
right?
kilometer. Yeah.
Difference in kilometers. Once I get those two, I can get the
We see variable cost per kilometer.
variable cost per kilometer. How much will be my variable cost per kilometer then?
So total difference in cost is 33,000 divided by 60,000.
Divided by 60,000. So let's go first with this one. I'm gonna have here. I'm gonna have 33,000, and here I'm gonna have
60,000.
60,000. Those two numbers. That's what I'm chasing, correct?
Yeah.
Once I have those two numbers, I'm gonna get the total. And that total here will be this one divided by that one. How much you get?
0.55 per kilometer.
What is that? Cost per
Cost per kilometer. Variable
per
cost
kilometer.
per kilometer.
Make sense?
Yes.
So now we get the variable cost per kilometer. Now, what's the next step? We're gonna see in the second what will be the next step. Let's get rid of this underline here. So that's my variable cost per kilometer. Let's highlight it with something. Let's highlight it with that color because that will be important now. Once you're using this one, we're going with the variable cost per unit. So now what we know about the total cost? I know that the total cost is equal to what?
Variable plus fixed.
Fixed cost plus variable cost, right?
Yes.
Now, what we know about the fixed cost? Fixed cost always stays the same.
Same. Yeah.
right? How about the variable cost? Variable cost is equal to what?
It
Number of
can
the units that we're using it, time,
into
cost per
variable
unit.
cost per unit. Yeah.
Make sense? Does that make sense?
Yes.
So what we said, if we have a variable cost, and if I want to find the variable cost for my McDonald's coffee, once I know that McDonald's coffee costs me $1 per unit, right? What's going to drive the cost in this case? Number of the units that I'm buying, right?
Number of units.
So let's say if I'm buying, that will be equal to number of the units time total coffee. So if I'm buying 0 units, how much will be my cost?
0.
0. If I'm buying 1 coffee, how much will be my
Then
cost?
1.
$1. If I'm buying 2 coffees, $2.
2.
10 coffees, keep going,
10.
right?
Yeah.
It's gonna keep
Keep
going.
going.
If I buy 100 coffees, $100. Make sense?
Yes.
Okay. So in our case, in this case, what drives the variable cost?
Kilometer.
Kilometers. And do I have my cost per kilometer?
Yes. 0.55.
0.55. So more a kilometer drive, more the cost gonna go up.
More variable cost.
Make sense?
Yes.
Okay, so now let's go to the total cost. Total cost now is equal to, we already figured out, fixed cost plus variable cost, but variable cost was number of the units
Yeah. Into
time
cost per
cost
unit.
per unit.
Cost per unit. Yeah.
Now, so our objective is to find out how much is my fixed cost is equal to what. That's our objective here. In order to achieve our objective, we can use high level or we can use the low level. Let's go first with the high level. Let's start with from here. If I want to use the high level, high point. For the high point, what do I know? I know my total cost is equal to what? How much my total cost at high level?
100,000.
100,000? No.
Oh, sorry, 63.
$63,000.
63. Yeah, sorry. Yeah.
Do I know my variable cost per unit?
Yes.
Yes.
0.55.
0.55. That will be equal to 0.55. And that's per kilometer, correct? Do I know my usage?
Yes.
Kilometer used.
For high, we have used 100,000.
For the high point, we use 100,000 kilometers, correct? So once I know all those things, what do I have to do? I have to substitute in this formula, correct?
Yeah.
Let's start. My total cost are
Total cost is your 63,000.
63,000. And
And
that will be equal to,
fixed cost is 100,000.
we don't know how
Sorry,
much is it, right?
Yeah.
But we know fixed cost should be equal to plus now the variable cost. How much is the variable cost now?
So
What we
we'll
said.
be
Variable cost will
0.55
be, in brackets, we're gonna have 100,000 kilometers, right?
into 0.5.
Time
Times
0.55. Correct? And then we can close the bracket. Make sense?
We're not able to see.
You're not able to see what's happened. Okay. How about now?
Yeah.
Can you guys see it?
Yes.
So that's our formula here. Can I find the fixed cost now?
Yes.
Yes. 63, it's equal to fixed cost. And here, plus what I have here on this side, we're gonna have 100,000 times 55. Correct?
Yes.
Now the question is, how much is the fixed cost?
63 minus 63,000 minus 55.
63 minus 55. How much you getting? Are we getting the same number here?
8,000.
8,000? Yes, that's what I get, 8,000. So this is at high point. Make sense?
Yeah. And then the same thing in the low.
Let's see. Now let's check this one and move it to the low level. Now for the low level, let's move it now to the green side, like this. And let's use the low. What do I know about the low? Low level. Do I know my total cost?
Yes, but we can't see it.
It's 30,000, right? Do I know
Yeah.
my variable cost per unit?
Yes.
It's
0.5.
55 cents per kilometer. And that will be per kilometer. Do I know my total usage? I know I use it 40,000 kilometers, right? Make sense?
Yes,
So
Professor.
in that case, what we're gonna have? $30,000 to be equal to the fixed cost plus 40,000 kilometers times 55 cents per kilometer. So once we express this one, we're gonna find out that the fixed cost is $8,000. Can you see it?
Yes, we can.
So the question is, do we have to use the 2 points to calculate the same? No. So what you're gonna do? If you have to use this method, use only 1 point. Don't use both, because both gonna give you the same. I'm using here the both so you can see that you're gonna get the same result. So don't waste your time. Now, what's the objective here? Why are we doing all this exercise? Our exercise is we to predict the cost. That's the only reason. So how can I predict the cost? By creating a formula. What will be my formula? Well, based on the information now that I have, do I know my fixed cost?
Yes.
How much is my fixed cost?
8,000.
It's $8,000. Do I know my variable cost per unit?
Yeah. 55.
It's 55 cents per kilometer. Correct?
Yeah.
So what I can do? Can I say that my total cost, it will be equal to $8,000
plus 0,
plus
0 point
number of the kilometers time
into
0.55 per kilometer.
kilometer.
Make sense? So if the manager come and ask me, how much will be my total cost? What do I have to ask him?
How much kilometer?
You're gonna drive the car.
Kilometers.
And once you tell me how many kilometers you're gonna drive the car, I can tell you how much will be the cost. Make
Yeah.
sense?
Yeah.
That's why we're doing this entire exercise. So you can predict the cost.
Because we'll be calculating as per how much kilometer driving, so it depends, and it will be something like
That's
that.
correct.
Okay.
So now let's go back to the slides and finish the slides now. So now we have our information here. So what we're gonna do? We're just gonna follow the site. We're gonna do exactly the same. So we're gonna get the high point. We're gonna get the low point. We're gonna check the differences. We're gonna use the cost as a nominator, activity as a denominator. We're gonna come with the cost per activity. Once we do that, we're gonna calculate the fixed cost. As you can see, regardless which activity you're using, you're getting the same result. Once we do that, we're gonna come up with the formula that's gonna help us to predict the cost. So that means that when the manager asks us, how much will be my cost if I drive the car 45,000 kilometers? We can easily tell him, well, it's gonna cost you 32,750 dollars. Make sense? So tell me what you think about this question. Which one are the variable cost?
A.
Only A? Keep reading. Don't stop when you see something that you like, don't stop reading. Keep reading.
I'd say it's the last one, both A
Letter D.
and
A and B.
Yeah.
So that's one thing on the multiple choice questions. Once you see the answer that you like, it doesn't mean you have to stop reading. You keep reading because there may be another one,
So,
right?
but
Yes, go for it.
they remain the same per unit at every activity level.
Yes.
So, can you explain? I think I got confused, so I said A and that answer.
Oh,
Like,
because so again, let's go to the McDonald's coffee. If I buy one coffee, how much is the cost per coffee?
one,
$1. If I buy 10 coffees, how much is the cost per coffee?
10 into 1, so 10.
No, 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 no. Listen,
Uh,
cost per unit. If I buy one coffee, how much is the cost per coffee for the
1,
coffee? $1. If I buy 10 coffees, how much is the cost of the coffee? One coffee.
1, the same.
One. Same. So regardless how many I'm buying, regardless
Oh,
the
you are talking about the per. Yeah, okay, now I
right
understood.
per unit.
Yeah,
We're talking per
yeah.
unit here, right?
I didn't see. Oh, exactly.
Yes.
Okay. Thank
So
you.
you're welcome. Here, there's another question here for the high and low method. I'm gonna leave you this question, you to do it at home by
Okay.
yourself. Now you have the calculation. If you follow the video, there's a video for this question. If you follow the video, you're gonna see the calculation, and you have already posted, I already posted for you the Excel spreadsheet for this question, so you can use it. Now let's move now to the manufacturing cost on the financial statements. How are we going to present the manufacturing cost on the financial statements? So obviously, on the financial statements, if we have a manufacturing company, that manufacturing company is going to produce a product, and that product is going to come with the cost. Now, that cost will be the cost of the inventory, and going to stay as a current asset on the inventory until we sell that item, and it's going to become cost of goods sold. So for the manufacturing companies and manufacturing company only, we're going to have three inventory accounts. First, we're going to have account for the raw material that we're purchasing to convert it to the finished goods. we're going to have account for the work in process inventory, which will be something that is start to work but hasn't been completed yet. And the final inventory account will be the finished goods inventory. Those are the finished goods which have direct material, direct labor, manufacturing overhead. They're completed and sitting and waiting to be sold. In the merchandising company, we're going to have only one account. Why? Because we're buying a finished product. We're just buying inventory and we're selling inventory. We're not producing anything. So, on the balance sheet, the cost going to stay on the balance sheet as long as it stays in the inventory. Once moved from the balance sheet, it's going to go to the income statement as a cost of goods sold. For the manufacturing company, however, since we have three inventory accounts, we're going to have interesting flow of all the costs. First, we're going to purchase the material, which is inventory. Then we're going to use material to start producing our product. It's going to be a work in process until it's completed, until we have direct material, direct labor, manufacturing overhead. Once we have those three costs, and somebody says the product is finished, it's going to stay in the working process. Once somebody says product is finished, that cost for the working process is going to move to the finished goods. And then we're going to have item ready for sale. Finished goods available for sale. Once we sell it, it's going to become cost of goods sold. For that reason, on the merchandising company, as we said, we're going to have only one inventory account, merchandising inventory. But in manufacturing company, we're going to have three inventory accounts. Which one is going to be shown first? As you remember, we're preparing the balance sheet based on liquidity. Which one is more liquid? Means which item can be easily sold. And since we have those three accounts, which are raw material, work in process, finished goods, the question is which one I can sell faster?
Finished goods.
Finished goods. Since finished goods I can sell it faster, always going to be shown first. Next one, selling faster, will be work in process. And the last one that is going to be hard to sell, it will be raw material. That's why they show in this order. Finished goods first, work in process second, raw materials third. On the income statement, obviously we have to get cost of goods sold. How are we going to get the cost of goods sold? Now, from the merchandising company, we're going to get cost of goods sold for the inventory account, which will be equal to what we have in the beginning, plus what we purchase, minus what left is going to give us cost of goods sold. I'm going to show you this in the class, so I'm going to spend a little bit time here on the class just to explain this to you. And the merchandising company, cost of goods sold is going to come from the finished goods account. We're going to have beginning finished goods inventory plus whatever we produce minus the ending is going to give a cost of goods sold. So again, to show it quickly on one place, that will be the beginning inventory plus the purchases is going to give us how much we have available minus what's left is going to give us how much we sold. On the manufacturing company, we're going to chase different account, not merchandising inventory. We're going to change it to finished goods inventory. Again, beginning balance plus whatever we manufactured is going to give us how much we have available for sale minus what's left. It's going to give us how much we sold. So how are we going to get cost of manufacturing cost? That will be work in process inventory plus the total manufacturing cost minus the ending balance on the work in process inventory is going to give us cost of goods manufactured. Let's see this question and you tell me what you think.
Total manufacturing costs?
Total manufacturing cost? No, watch this. Total manufacturing cost will be out of here. So what we're chasing here, what's the amount of the
Cost,
direct material, direct labor, manufacturing
cost
overhead?
of goods manufactured
Cost of goods manufactured.
Cost of goods manufactured. Yes,
because it said direct level manufacturing direct materials.
that's correct. How about this one? No, this one, no. This one, we're gonna leave it for the class. We're gonna go over the
But
class. This
the
one?
answer is C number, sir.
Sorry? Answer is number C here.
Total
Number
manufacturing
number
cost.
C.
Okay.
Yes, total manufacturing cost. Question 7, I'm gonna leave it for the class. I'm gonna show it in the class. How about this one?
Mm, First one
Three,
is
two,
Finished
one.
goods.
3, 2, 1. 3,
What's
2,
the
1.
order?
3, 2,
Letter
and
D.
1.
So
First will be
answer,
the finished
Is D.
D.
and that's the correct answer. So now let's see something else. Watch this. Pay attention to this question.
Yeah.
So that three things that you have to pay attention today. Value chain. What's the value chain? How can you explain the value chain? Second one is high and low method. Third one is this question. So, what's in this question? For the current
Prime
period,
cost.
prime cost
Prime cost.
are 195. So here those are equal to 195. Conversion cost are equal to 140. Total product cost are 270. Question is, can you tell me how much is the direct material, direct labor, manufacturing overhead?
So
Yeah, we can find DM plus D equals to 195 and oh no.
So
What
watch
we
this.
can do,
Once I know this, what do you have to do? Very simple.
Find the difference.
we have
That we
to
can find the difference, but let's copy this one information and let's move to, I'll show you where. Just give me a second to find the slide. We can move right here. Can you see this slide?
yeah.
So let's duplicate this slide. So on this chart, what do I know? I know
Prime
those
cost
two,
is, yeah.
I know those two, and I know those three are 270.
Yeah.
Can I find out what's the direct material? What's direct labor, manufacturing overhead? Obviously, you should be able to. Why? Because those two
Is one prime cost 190.
minus plus this one is going to give you this one. Correct?
Yeah,
Once you,
DM plus DL is 195 plus MOH equals 270. Then
right.
MOH we can find MOH, then we can put
And you, from the conversion, you can find the direct labor. And once you find direct labor, you can find
DL.
direct
Yeah.
material. Make sense?
So by putting those value in the third
Correct.
one, prime cost, and then we'll be finding MOH, then we can put in conversion cost. Then we'll be
Correct.
finding, yeah.
Okay. Make sure you know this question. Okay, so here in our case, where is that? It's here. So how are we gonna get it? This is the solution. Total minus the prime is gonna give you 75, which is the overhead. Once you get the overhead, then you're going to find direct material, and then you can find direct labor. The last one is again, another version here for the high and low method, but I'm not going to spend time on this. They're using here the table, which is the chart, but that's not examinable, so I'm not going to spend time with this. If you want to take a look at this high-low method, and you can easily come up with the calculation and come up with the formula which is going to help you to solve the problem.